Hi, thank you for joining me at the Rare Earth panel today at Minds, Money, Online and Connect. My name is Josie Armstrong. I'm a principal consultant at CRU Consulting. We specialize in providing strategic advice to the metals and mining and fertilizer industries, including the rare earth industry. And today I'm joined by a panel of esteemed rare earth experts to talk about the latest trends and developments in the rare earths industry, as well as the outlook and possible opportunities and risks for investors and developers. And before we go into detailed discussion, I'm just going to start with a brief, well, just to set the scene a little for those of you in the audience who have less knowledge of the rare earth industry. So just take you back now to 2010. So in 2010, there was a lot of, well, the world's mining industry had its attention firmly focused on the rare earths market. And this was due to a diplomatic incident that happened between Japan and China, China being the world's largest rare earth supplier. And this incident prompted it to halt its exports. And as a result, rare earth prices rose significantly, and there were global concerns about security of supply. And the reason for this is because rare earth elements are used in a whole range of applications, including consumer electronics, metal alloys, catalysts, optics, and many other applications. And as a result, there were some projects that started development prompted by this crisis, but they haven't enjoyed great success since. Now, fast forward to today, and now there's renewed interest in the rare earths market again. And so what's prompted this? Well, actually, it's a fundamental shift in the market. The change is an increase in demand and not geopolitical concerns this time. And the reason for this is because rare earths are playing a vital role in the world's clean energy transition. So they're being used, a number of elements are being used in clean energy applications, such as wind energy and electric vehicles. And as a result, some elements, for example, neodymium and praseodymium, are enjoying accelerated demand growth. So if we then look at the supply side, on the other side, there are changes as well now on the supply side, but China remains a dominant feature. So whilst back in, say, 2005, China controlled nearly 100% of the world's mined rare earth oxide production, today it's still, that has come down a little bit, but they're still very dominant at around 80%. China is also very dominant across the whole rare earth value chain, from mining through to processing, through to metals, even magnets. We also see many rest of world producers of rare earths still reliant on the Chinese market. For example, many have to send their concentrate to China for processing. Nonetheless, we are seeing increased, in response to this demand, we are seeing increased interest in projects outside of China. So there's a whole pipeline of rare earth projects at the moment in places such as Australia, North America, Africa, and many other places. And we're also seeing renewed interest in processing capacity, so beyond just mining as well, outside of China. So now we're going to speak with the panel, and we're going to learn a little bit more about these conflicting trends in the market. So I have these conflicting trends around demand, supply, and pricing. So to join me to discuss this in detail, I have on the panel today, I have Gaius King, who's a resource analyst at Fox Davies Capital. I have Ryan Castilloux, who's the founding director of Adamas Intelligence. I have Thomas Kruemmer, who's the director of Ginger International Trade and Investment. And I have Nabeel Mancheri, who's the Secretary General of the Rare Earth Industry Association. So thank you very much, gentlemen, for joining us today. So I'll start off then. Nabeel, would you mind if I asked you, first of all, what role do rare earths have to play in the energy transition? And what's the relative importance of these clean energy applications versus their traditional applications?
Yeah, thank you, Josie. I'm happy to join this interesting panel, of Minds and Money. Yeah, thanks for the nice introduction, and you partially touched in your introductory speech of how important are these elements are. I would say these are the indispensable elements for the energy transition. And people used to say these are the industrial vitamins, including many other CRMs or critical raw materials. But now I would say it has become kind of staple food, because the kind of quantity or demand that is coming from the applications like wind energy or new electric vehicles, the quantity is huge. It's becoming more than the vitamins. And compared to the traditional applications like catalyst or alloys, by quantity wise, the new applications are not so huge. The catalyst and phosphors and alloy markets still dominate by volume or by tonnage. But if you look at the value terms, the magnet materials or the magnet market are dominated, just opposite of what the traditional market is. Yeah.
Okay, well, thank you very much, Nabeel. Gaius, so if we think about that use of rare earths in magnets, so permanent magnets, one of the key areas is in electric vehicles. And I understand you, in your role, you look at great detail at the electric vehicle market. So what trends do you see here, and so those trends in the electric vehicle market, what do they mean for the rare earth market?
Yeah, so I guess just to take a sidestep away from rare earths, but it's directly related. If you remember in 2015, 2016, there was a big boom in lithium, and Citigroup came out and they said by 2020, all the 30% of all the cars sold would be electric vehicles, battery electric vehicles, not hybrids. And JP Morgan, not wanting to be left behind, came over with a substantially greater prediction and said it's going to be this big, et cetera, et cetera. So if we looked at, there was a boom in lithium at that period, in Oricombo, and a few of the others got in production, but most of the capacity came on from existing players. And then, so November a year ago, or say 15 months ago, lithium prices were at their nadir at $6,750 a tonne. As of today, they are at $73,000 a tonne. So what the story was is that they got the timing completely wrong, but they got the story right. And this is what's going to happen to rare earths. 12, 18 months ago, there was some of us around who were predicting that rare earths were going to be the next big thing. And we looked very stupid for at least a good 12 or 18 months. But that demand is coming, and it's coming from electric vehicles, predominantly permanent magnet driven. So although Nabeel was saying they are a relatively small portion of the overall demand at the moment, that's the group that's growing. That's the group that's got the high value impact. And we've modeled, and we think by it's going to grow 20 times just that segment, not the whole market. Whole market will only go up 150%, but the electric vehicle market will go up around about 20 times of last year's demand. So yeah, it's interesting.
I mean, 20 times is very, very sizable.
Yeah, obviously it's only at 3,600 tonne or so a year ago, and we estimate it's going to hit around about 64,000 tonne by 2030.
And is that just, and that's just
electric
permanent
vehicles.
Magnet use, and that's also that's the wind turbines.
Right.
It's also the electric vehicles.
No, that's not wind turbines. So previously no, that's just electric vehicles. So previously we had come out and we had we said by 2028, and we said a number of times that wind turbines would overtake the electric vehicle market by 2028 because these things use substantially more. We're not so sure on that at the moment because although we've modeled the car market very accurately, well, as far where we think very accurately, there's a lot of data out there, and we've made, as far as we can, the most accurate predictions based on the amount of data. We don't have that same clarity for wind turbines because a lot of that is driven by government policy. The reason why we were so bullish on wind turbines 12 or 18 months ago was that China was promoting wind turbines and then took away a lot of subsidies, and we thought that demand would inevitably fall, and it didn't. It kept growing at pretty much the same rate or even greater. Now that's fine for China. China's got all these light rare earths that can produce these permanent magnet turbines. The rest of us don't. So we're not exactly, when we model the car industry, because demand was so strong, we thought, hang on, there isn't the supply. And we are unsure, because China's very much an opaque market, we're unsure that China can even meet that supply. So it then immediately raised questions on our previous predictions. Well, the wind turbine industry can't grow that strongly either. So, because a single wind turbine uses around about, it's worth about 100 battery electric vehicles and about 300 or a bit under 300 hybrid vehicles. So a single wind turbine uses a lot of, permanent magnets by comparison. So, yeah, we're revisiting those.
Okay, so then when you're talking about permanent magnets, my understanding is that you can also switch to induction magnets.
That's correct. Yeah.
So is there a substitution risk with these high prices that people could move away?
We've just done numbers on that, and we should have a note hopefully coming out in a week's time. We've done sensitivities on vehicles. We believe on permanent, at current prices are very high, and I've got some graphs there if you want to see them, but we believe if you double prices from where they are at the moment, and understand that they've just gone up 5 or 6 times in a relatively short period of time, if you double that price, it only impacts the average price for a European battery electric vehicle by 0.7%. So the highly inelastic. The point is the price in neodymium is completely almost abstract from what the electric vehicle is. If you do that for hybrid vehicles, because they only use around about 30 or 40% of the amount of neodymium, it's 0.03%. So that they are perfectly inelastic. Effectively, you can, now obviously you wouldn't, but you could increase the neodymium price tremendously and it would have no effect on the end user demand, because it doesn't affect the underlying ceteris paribus, that everything else remains the same. So yeah, if you run those numbers, and then that's not unusual in some industries. I remember we spent some time looking at the nuclear industry. If you double the price of uranium, it only increases the cost of power by 1 to 2%. So that, there are industries that are highly inelastic to the underlying, or you think about aluminium going into a Boeing 747, it's a relatively small amount. The cost is minuscule, it's the value out on top. And it's the same here for neodymium and praseodymium.
Well, that's interesting. Ryan, if at the moment, sadly, the eyes of the world are firmly on the war in Ukraine. What is the impact of that war on the rare earths market? I mean, I've heard some people talking about, there's a short-term impact, but then sometimes people start talking about the medium-term impact and saying we could even see an acceleration of the energy transition, which may have an impact on the rare earth market. What do you think?
Yeah, sure. Sure, it's a great question, and I think there's a lot of implications to consider in terms of the direct impact on rare earth demand. We don't see a direct impact at this time. If we consider that both Russia and the Ukraine are both key suppliers of raw materials to the semiconductor industry, the chip industry, then there's potential for additional bottlenecks in a market that's already facing them that could slow vehicle production as a whole and could potentially slow electric vehicle production in the near term. If we consider kind of the Russian EV market, it amounts to maybe 2,000 vehicles per year. So directly, should they not have access to EVs, the market's not going to feel that. On the energy side of things, this certainly, I think, wakes up the world to the sensitivities and the risks that we have of relying on single actors for energy in this case, but also for rare earths, for critical materials in other cases. So I think that is serving as a realization that EVs are perhaps one way to begin to mitigate that risk, begin to move away from it. But there'll be no overnight change in that regard, perhaps a bit of an acceleration of demand. But again, it's all down to supply chains as to whether or not they can meet that demand. So as some of the earlier speakers have mentioned, EV demand is growing very, very strongly. It more than doubled last year. We expect this year it will attempt to do the same thing, but we'll have to see how supply chains fare out and also how automakers adapt to those. We saw late last year certain high-profile EV makers delivering EVs without certain parts, without certain components because of that chip shortage that they intend to kind of fix further down the road through recalls. So we'll have to see more creativity like that this year to try to fulfill EV demand as much as possible. But the risk is certainly there because of Russia, Ukraine.
Thanks, Ryan. Thomas, so staying with supply chains is a slightly different angle. I mean, my understanding is that you advise clients on rare earth sourcing and supply chain structuring. Can you explain a little bit more broadly how geopolitics impacts the rare earth supply chains and any changes you've seen over the last 6 months to a year there?
Well, of course, politics are everything about rare earths. Simply, this boom was kicked off with the Paris Agreement in 2015 on trying to keep the global warming at 1.5 degrees by the middle of the century. And what is suggested in this agreement is that we apply something like sustainable development. Actually, the term sustainable development is mentioned 17 times in that document. Of course, what the countries read from it is sustainable growth. What the whole thing implies is that we simply switch to renewable energy and electrify our mobility, and then all will be well. We can continue consuming as much as we like. So resulting from that, of course, was analysts in commercial companies, car manufacturers. Ryan also went out and calculated, oh, okay, so what does this mean for demand if we all go electric? Gaius also did a fantastic study about this. And it turned out that the supply-demand balance would go completely out of whack by 2025. Actually, it has gone out of whack already much earlier, as we can see in lithium and in rare earth prices. We had price developments, several 100%, the prices are up last year. So there's no quick fix to it, because if you look at the average rare earth miner, he has a rare earth mine that has, say, hard rock, 1.7% rare earth contents. To bring this from exploration to start of operation takes plus minus 10 years. So whatever we are starting now won't be finished by 2030. The investment is also rather large. The difference with single element mining is you are dealing with more than a dozen of products and not a single one. And you have to separate all of them in order to get the value and also the functionality out of these rare earths. That costs you, depending on where you are, plus minus $1 billion of capital expenditure. So this long period, plus the rather large capital expenditure, is for investors a little bit scary. So analysts, including, for example, Argus, have been calling for governments to invest directly in rare earths. But obviously, knowing how state ownership tends to work out, this is not a very good concept for most of the stakeholders involved. So in the end, it may be that we will have to rely on China to feed the world with the magnets and the rare earths for other applications that we need. That is, of course, controversial given the current trade dispute environment, but this is probably how it works out unless there is substantial investment from governments. Yeah, if the Australian government is throwing $30 million at some rare earth miner, that doesn't mean anything. It's peanuts. It's a drop in the ocean. Sorry for the long.
No, not at all. No, it's fine. No, so Ryan, just to add to that, I mean, last year we saw GM announce a deal, well, an intention to source its raw earth materials and metals and magnets for EVs within the US. I mean, generally, how feasible and realistic is it that lots of end users can actually regionalize their supply chains and move away from China? I mean, Thomas touched upon some of the points there about limited abilities of governments to influence that. What's your take? Is it feasible?
It's feasible in theory, but Thomas made some great points with respect to the long lead times to bring about new supply that, you know, can help automakers and others diversify and develop new sources of supply. In the case of the GM announcement with their intent to source magnets and perhaps other materials from MP Materials, that makes sense. And that's one of the low-hanging fruits available to the industry that GM has now grabbed a hold of. You know, assuming MP Materials is successful in getting their oxide production up and running, they then need an outlet for the downstream of that material. So it makes sense to then produce magnets, and it makes sense for GM or somebody else to express an intent to use those magnets. It dovetails both with the Biden administration's goal of domesticating more of the supply chain, of weaning itself off of China for rare earths, and it also dovetails well with the emerging electrification targets in America to have 40 or 50% of all vehicles sold in the US, and I guess presumably also in Canada, be electric by 2030. For others that wish to do the same, there aren't a lot of options at the moment on the supply side. So it's great to build a magnet plant, but if you don't control your upstream, you're still going to be equally reliant on China and whatever prices those materials come at to keep your magnet factory turning. So it's plausible, it makes sense, but just not a lot of options at the moment for those that wish to follow suit of GM.
Yes, it certainly doesn't sound straightforward and easy.
Maybe one thing important to understand for people who view such a discussion for the first time, these permanent magnets that are essential for the renewable energy and electric vehicle market are primarily produced in China with a market share of, I would guess today, of about 88%. The remainder comes from Japan, and then in Europe and in the US, the quantities are minuscule, several hundred tons. So that the magnets are the key. Also, if you look at rare earth materials, it is the magnetic materials, basically 5 of the rare earths, who go into these magnets that are 95% of the total value of the rare earth market. So if you then add to that China dominates that market, then you understand the difficult position everybody is in to have a workable concept for rare earths and magnets. If you look at the junior rare earth miners, a large number of them are not that junior at all. Some of them have been working on their deposits for 15 to 20 years even. So there are some places that are explored to death, literally. Yeah, so if you now look at a deposit that is only explored now, you have an enormously long timeline. But if you look at what has already developed to the stage where it's ready to receive investment and start going, I would say that there are at least a handful candidates for that. The trouble with all of them is, of course, these are uncharted waters, and it doesn't help you if you have the oxides, the rare earth oxides, if you need magnets, because we don't have any magnet manufacturers. Yeah. And, you know, people like certain junior rare earth miners who have announced projects to extend into permanent magnets, they try to imply that we are talking about commodities or something like this. This is not the case. These are highly specialized products that require highly specialized people with a lot of experience. Otherwise, you're turning out a lot of magnet scrap, but not a workable magnet, you know? So these are very, very long developments. altogether. But if we would first go this step and have some rare earths, even if then this needs to be sold to China, like Linus is doing it actually with their so-called SEG, the material that they can't or don't want to separate. So even if the junior rare earth miners have to sell to China, it's a start. It is cash flow. It works. The prices are okay.
And absolutely, and it's the same with the nuclear power industry. The reason why nuclear power can't go global is that there is not enough specialists in certain countries that can run these plants. The UK used to be the first country, was the first country in the world to build a nuclear power plant, can no longer build a nuclear power plant. It doesn't have the specialization. People underestimate how incredibly detailed, and Josie made the point that China have not only gone to the processing in the middle in the refining, they've gone to the manufacturing and the downstream. They have 30% of the world's manufacturing now. They've gone completely vertically and horizontally integrated. So you can't replicate that in a World Trade Organization country. That's a mercantile. The Chinese have purposely gone down this mercantile route, which actually the last country that did that was incredibly successful, and there's the UK. A little island in the Northwest Atlantic at one stage had 50% of the world's manufacturing because they went down the mercantile. They made sure that they had the raw resources and they made sure that they produced the end product. And that's exactly what China's done. And it's unbeatable. And it's unbeatable, and you cannot replicate it outside China. So although this discussion is kind of interesting from an academic point of view, from a practical point of view, we can't replicate what China has. That's my opinion anyway.
Yeah, only evolutionary. Yeah. And that goes only in cooperation with China and not against China. And then you have these junior rare earth miners who try to get a very martial image, you know, about building war machines, you know, trying to make the investor think that there's a guy with a shovel and a little pile of blue powder which he shovels into an F-35 airplane. You know, this is of course doesn't fly. But again, I mean, my little company invests in rare earth junior miners, and some of them have potential, absolutely, but one has to be extremely choosy and very, very careful. Much of the information in the rare earth space only comes from paid promoters, you know, stock promoters, you know, who interview the CEO and of course only ask questions which have been prepared and to which there is a glorious answer. So it's very hard for the average investor to get a reasonable, informed base on which to invest, but it is possible.
These are all really interesting points. It does seem as if it's incredibly difficult to get a rare earth project into development, and there's perhaps people are underestimating often just how difficult and how different this industry is to many other single commodity industries and projects. I'm just going to change tack slightly because I'm conscious of time and I want to make sure we cover a broad range of subjects. So I'm just going to talk a little bit more maybe about sustainability, because I know that's a big question across metals and mining at the moment. And you know, metals and mining companies are facing increasing pressure to be sustainable and to show progress towards mitigating those negative consequences of their production. So with rare earths production, there are, you know, it often faces criticism that it does have a negative environmental impact. So Nabeel, I know your organization, the Rare Earth Industry Association, has been working very hard at the moment to deal with that and to ensure greater sustainability across the rare earth value chain. Can you tell us a little bit more about how sustainable, in your opinion, rare earths are and how your members are rising to the challenge of sustainability and what measures they're taking?
Yeah, thank you, Josie, for that interesting question. Yes, sustainability is an issue, and along with sustainability, I also refer to transparency. And because, you know, previous speakers mentioned a couple of occasions on number of issues, is actually connected to transparency as well. And if there is lack of transparency, you know, Thomas several times pointed out, you know, it's actually lead to the the price volatility that we see, and that is linked to geopolitics, because lack of transparency is also linked to geopolitics. And you know, for demand side, the earlier part of the discussion, the market is quite transferable. Yeah, it's visible. But on the supply side, you have a lot of issues, and that the OEMs were not aware of. You know, in the initial case in 2010-11, the OEMs were not very much sure even where the material is coming. You know, what kind of material is there in their product. But that situation has changed. That is why we see, like we discussed, you know, OEMs like GM is, you know, at least, you know, talking about the issue and try to deal with this kind of thing. Not only GM, also other OEMs, you know, do, you know, try to get answer from association like us. And now there are also issues of the sustainability, and sustainability from, I'm not talking about from an environmental side of thing, but there are also sustainability of the technology that you know, previous speakers mentioned, because you know, it's a very niche market, and some countries are dominating in that technology. And also from a price perspective, how sustainable is that price you are paying now? So there's a number of issues connected with sustainability. And from environmental perspective, the new regulations coming especially from the western part of the world, and in China has their own, you know, sustainability standard coming up or in implementation phase. China has developed on sustainability front. They have done a lot of work last 10 years. They have moved and you know, they have a lot of restrictions on illegal production and this kind of thing. So it's linked sustainability and transparency, and OEMs try to get to a level that, okay, now they want to learn where is the material is coming. Now you have an issue, for example, like the one you had before on cobalt or conflict minerals coming from African countries. Now, for example, you have a discussion about the heavy rare earth contained in your magnets. If, for example, if you know, the material is from Myanmar, and now Myanmar is a case study for several people, and so OEMs, everyone want to see, you know, how you can you know, increase the sustainability. And it's also the regulation. I forgot to mention the regulation coming up in Western world. You know, for example, your commitment to your, you know, eco product, eco labeling, you know, circular economy regulations, for example, in EU. And for example, battery regulations, also your commitment for recycling. So all this kind put pressure on the OEMs and downstream players, kind of have a system that they can measure, you know, the sustainability of their product. So in that sense, you know, we try to implement a program connecting the downstream players and the upstream players across the globe, that we provide a integrated platform for these companies. The platform provide is that they can also measure the environmental impact of the material they use, and also they can trace their material up to the mine, and they can also capture, you know, how much of a recycled product is in their product. So it's a blockchain plus traceability integrated system that allows the OEM to trace their material along with capturing their, you know, sustainability metrics. Yeah.
Okay, so it's quite a strong.
Oh, sorry.
Oh, sorry.
Traceability,
what were you going to add? Sorry, guys.
Traceability by blockchain was something that China announced, I think, beginning last year for rare earths. And it is already, the whole system in China is geared towards transparency. They really want to have transparency themselves. But as we saw recently, the planned numbers and the obvious actual output, there's a big difference that is very hard to explain. But you see, in terms of sustainability, and you mentioned Myanmar, the mining methods for this particular resource of rare earths that are used in Myanmar are exactly the same as they are used in China. Right here, right now, this has not ended. They tried other methods, it didn't work. So they're still using the very same methods. So if you say what is happening in Myanmar is unsustainable, you would imply that what is happening in China is also not sustainable. It's essentially the ammonium sulfate that pollutes the groundwater, because you have to do in situ leaching, because the content of rare earth is so small that the cost of just moving it 100 meters to a heap leach, would already kill the whole thing commercially. Yeah. So the sustainability on the environment is an endless problem. I would think the biggest problem that I see is we have rare earth deposits in the EU. We also have in the US. But the main problem why they wouldn't get off the ground is that rare earths love radioactivity, particularly thorium, which is a decay product of uranium, and uranium. So practically wherever you mine rare earths, you will have also some waste, or some people call it resource product, of thorium and uranium, and you have to deposit it somewhere permanently, safely, and environmentally in an acceptable way. Don't put it in the next river. So, and that is a problem. You see, in the EU, for example, there are permanent disposal facilities for hundreds, thousands of tons of radioactive waste, from hospital all the way to nuclear power plants. The deposits are there, but if there's a rare earth miner who will produce maybe 1,000 tons of thorium per year, he has no way of disposing of it, and because this is so, he doesn't get licensed. And that is very similar in the US. In the US, you only have one private company that is allowed to process products, including rare earths, that will result in a radioactive byproduct. Yeah, that is the core problem. So we are kind of speaking with two tongues when we say, oh, strategic product, and we need it, and we must do everything possible. Yeah, but when it comes to also taking the detriment from this mining, then everybody starts hiding. Yeah, Germany last year quickly closed its last remaining permanent disposal facility in Gorleben, yeah, just to be taken out of the responsibility in case there is radioactive waste from mining activities to be disposed of somewhere in the EU. Yeah, so that is a big problem, and that's political.
So we can see that there's sizable kind of environmental concerns on the primary side of the rare earths market. Ryan, if we look at the rare earths market, I mean, if I'm seeing, say, in other industries like aluminium and steel, there's a really strong push for greater recycling to decarbonize the value chain and to reduce that environmental impact. But in rare earths, my understanding is that recycling is still relatively low. Is it realistic that we could see greater secondary use of rare earths in the future, and what factors would actually lead to that?
Yeah, certainly. So recycling of scrap, of end-of-life devices is remarkably low, with the exception of China, where it's beginning to take off and where it's particularly warranted in this pricing environment. Unlike batteries for EVs, which are large and come with an inherent amount of value, the motors in an EV contain 1, 2, maybe 3 kilos of magnets, and with it a significantly lower volume. So just centralizing end-of-life motors would be an immense challenge, not one that is not doable, but at the current levels of EV market penetration would be very challenging, very cost prohibitive. Once centralized, getting the magnets out of those motors after they've been embedded into the e-steel to survive eternity is an additional challenge. So there's been a few different approaches as to how to get around that. One is just to simply melt the entire motor as it is and to get the rare earths out of that. That's going to come with a cost, with an energy footprint, with a carbon footprint. So a lot of unknowns that have kind of kept the industry from flourishing so far. The good news is that, as I mentioned, at the current price levels and with demand continuing to grow year over year, the business case is improving over time. And with government support and perhaps a top-down kind of mandate, we do expect that end-of-life recycling will pick up over time. albeit it won't be enough to bridge the gap that we expect between supply and demand, but will become an increasingly important part of supply. When producing magnets, there's another form of waste that is generated in abundance, and it's commonly referred to as swarf. And that is the material that is produced when going from a large neodymium iron boron block into the individual magnet forms that end up in EVs, in headphone magnets, in wind power generators, etc. So the industry is very active presently at recovering rare earths from swarf and at feeding it back into the supply chain. So that will continue to happen, and is an important way to keep costs down for the magnet industry and thereby keep magnet prices down. So an important distinction there, when you hear about secondary production of rare earths or recycling, you may hear from one source that it's happening in abundance, and perhaps they're referring to that swarf component. And in other cases, as I mentioned, it's still yet to really take off, and that concerns the end of life devices. But in all cases, all forms of supply are needed going forward. We're currently at the tail end of wrapping up our latest annual report. And just from a high level view, we're anticipating demand for magnets and magnet rare earths to triple from 2021 through 2035, whereas global production will more or less only double. So it gives you a sense of just how large that gap will be at that time. And the direction of demand is continuing only up after that. So the challenge ahead is immense. It's unlikely that supply will meet demand, and therefore certain end uses will be turned away. We'll have to adopt alternatives, starting with the conference badge magnets, moving through to headphones, and kind of up the chain of high performance end uses. But the good news there is that it also provides us with a future market that can justify the price levels that we see today, because the main demand drivers will be things that are less cost sensitive, like Gaius mentioned at the outset, with EVs, with wind turbines, etc., versus smart speakers, which today are scurrying because magnet prices have become such a large portion of costs. So a lot to happen in the future, a lot of challenges, a lot of opportunities. But the more recycling we can bring online, or the more supply from any source that is sustainable, the better we'll be.
If I may chip in.
Oh yeah, no, please do.
Okay, so the preferred source of recycling material from magnets is the so-called swarf or cutoff. You should imagine that when the sintered magnet comes out, it's a block, it's called a blank. And then this has to be cut to size of whatever the customer requires. And if you have ever seen the little magnet in your mobile phone, then you will know this can be tiny. So you have offcut and swarf from milling of about 15 to 30% of the magnet blank, which goes straight back into recycling. It is preferred because this is before the coating of the magnet. Magnets, when they rust, demagnetize, so you need to have them coated. So the coating is not standardized. So every single lot of recycling magnet is different. So this coating is a big problem for the recyclers in the EU, nascent recyclers. We do not have the material that we want to recycle because, as Gaius has shown us, 94% of the magnets are made in China. So where you guess does the scrap occur? In China, of course. Yeah, from the magnet supply, I gather it's about 25% of the raw material is gathered from recycling in China. So what is left to us is the scrap from electric vehicles and wind towers. These are reasonably large magnets that could somehow make sense to retrieve and recycle. But please, how old is this industry? How many electric vehicles will be decommissioned in the next 5 or 10 years? It's not much. Yeah, wind towers. In 2015, I think, everybody says wind towers. These are offshore wind towers that have the permanent rare earth magnets inside. Offshore. If you call Vattenfall today and you ask them how many permanent magnets made from rare earths do you have in your wind towers, they will say 0, because this offshore technology with rare earth magnets is only starting. The whole world in 2015 had 3,200 offshore wind towers, which will be decommissioned sometime between 2025 and 2030. That is the total availability of scrap for recycling. So electric vehicles, very few. Oh, sorry,
I totally agree with Thomas there. And in fact, he's hit the nail on the head. I think Ryan can correct me. I think the secondary supply at the moment is about 1. I don't think it's even close to 2%, but I think it's about 1%. I'm not sure Ryan can tell you that. But Thomas is dead right. If you look at wind turbines, and this is the problem I had when I started modeling, the wind turbines that are getting replaced now, and I made the projection that, and this might differ with you, Thomas, but I made the projection that you would use the offshore technology onshore as this new cycle starts taking over. So that's the assumption I made. And the reason why you do that is you get rid of gearboxes. The efficiencies are getting close to the Halliday 10. I think it's about 41, 42% efficiency. You know, they're a great jump ahead. So the demand is there and the technology is there, but all the wind turbines getting recycled now have gears and are highly inefficient, about half, if not a third of the efficiency of the new generation coming in. They have no rare earths. And same with electric vehicles. I mean, so at the moment, I think the Halliday 10's got a 25-year life expectancy. So what Thomas is saying is what's going to happen in 25. Currently, I think the average lifespan of an English UK wind turbine is 19.4 years. So we've got either somewhere between 19 and 25 years before we start get that as secondary supply. Same with electric vehicles. We think because the batteries degenerate so quickly that the electric vehicles, the average lifespan will drop somewhere between 12 and 14 years, I think. So that will probably be the first block off the rank where secondary supply. But again, we're only talking minute amounts. I mean, genuinely minute amounts. And again, Ryan's the expert on this, but I think at the moment, secondary supply is 1%. And even if you go forward a decade from now, I don't think it's even going to hit 3 or 4 or 5% because the recycling, the inventory is not going to get to its lifespan. But again, Ryan's probably better at that.
I'm just going to have to jump in there because we're just close to the end of the session. I just wanted to ask one sort of last wrapping up question. Ryan, so as we're nearing the end, what's the outlook, would you say, for 2022, 2023? What are the main things we should expect to see in the rare earths market?
I think we'll see continued tightness between supply and demand, with the supply side collectively trying to keep up with demand growth for magnet rare earths. We're currently in a bit of a seasonal lull at the moment, so prices are beginning to retreat. But I don't think we should take that as a sign of what's necessarily to come. As demand cycles back up later through the year, we think prices will follow suit. Looking beyond this year, we'll really have to see how much this year is hindered, if at all, by what's happening in Ukraine and Russia, what's happening with semiconductors. But ultimately, we don't think that the EV market can continue to grow at the 100% plus rate that it currently is. And particularly if looking on the battery side of things, bottlenecks are likely to present themselves on that side of the equation sooner than later. So expect a bit of a slowdown in the medium term, but longer term EVs are the direction the market is going, and with it, demand will continue to grow very strongly.
Okay, so slow down in the short term, but back to that kind of positive trajectory and demand beyond.
Yeah, a seasonal slowdown in the short term, and with it, a bit of a correction in prices. Mind you, spot prices have really departed from the industry guidance prices that are regularly cited by leaders in China. So we think those prices will converge again at a slightly lower level than the spot market today, but by all means, still in much healthier price territory than we were 2 years ago, and in an environment that can justify the development of almost any rare earth project, assuming that you're willing to wait, whatever that time span is for that capital payback period, which even with high operating margins can still be quite long sometimes.
Can I
thank
just
you.
briefly?
Thank you. Oh, sorry.
Sorry.
I think we just.
Okay.
Okay. We only got 1 minute or so. So just a quick summary. Is that okay, guys?
Yeah.
Okay. Oh, no, sorry, just if you want to add your point just quickly.
Oh, okay, sorry. At the moment, we've made a bunch of projections, but at the moment, I think that we're getting to the stage where we can have neodymium praseodymium mines. At current neodymium prices, they're 4 times more profitable than a copper porphyry. I repeat, they're 4 times more profitable than a copper porphyry. So it's only going to be a matter of time before the big mining companies move into this sector. And they're the only chance. But again, they don't have the technology to process, which I think Ryan and Thomas will go on about, and Nabeel as well. So it's still, you're still reliant on China. So there's a lot of ifs and buts. But at the moment, neodymium praseodymium mine would be 4 times as profitable as a large copper porphyry at the same grade, which they are roughly.
Okay. All right. Okay. That's a lot. So, I mean, overall, it seems as if there's a lot of positives for the market, but there's still sizable challenges overall, but a long-term positive trajectory overall. I'd like to thank you all, though, for your time, because unfortunately, we've come to the end of the panel today, but thank you very much to Thomas, to Gaius, to Ryan and Nabeel for their time today and for their contributions. I hope that the audience has found this as interesting and insightful as I have. And thanks once again to you all. And that's all from us today.